Welcome back to another Trade Alts technical analysis tutorial. This is Ichimoku volume 3, or rather a part 2 to the previous video that I did on optimal trade entries. So we mostly focused on the long trades. We obviously had that one counter trend short trade that we went over. I wanted to do a similar video, but focusing on the short trades. So again, focused on long trades in video number 2. For video number 3, I'm going to focus more on the short trades to again show you how we look for optimal trade entries. Let's get started. So just a quick reminder on optimal short entries. So these are the 4 criteria that you really want to see confirm before you enter your short trade. Number 1, you want to see price be below cloud. Number 2, you need to see a bearish TK cross, so your Tenkin and Kijun should be bearishly crossed. Number 3, your cloud should be bearish. And number 4, your Chiku span not only below price, but also below cloud as well. So just like I mentioned at the beginning of the video, I really want to focus on short entries for this video. We covered in the previous video number 2, we covered a lot of the long entries looking for that really big move to the upside and kind of covering how you would have traded that. We're going to focus here. So starting at Bitcoin's 69K current top here back in November, all the way up until today's price action, right? So mostly focusing on this big area of price action and looking at trades, to take not only from the short side, but to see if there are any counter trend trades as well that popped up. And to see, again, would we have taken those or not? And just to reiterate, going back to video 2, I'm not a big fan of taking those counter trend trades, going against the overall daily trend, right? So again, this is a 4-hour, and we're going to be looking for entries and exits based on this, but you always want to revert back to, and for myself, the daily is really the telltale higher time frame that I want to pay attention to. So that's going to be kind of the basis. Again, if the daily is bearish, typically I only want to be taking shorts. I'm not really that interested in long trades until you get other types of confirmations that could pop up. So let's get back to the 4-hour chart and try to identify some potential setups using the optimal trade entries. Start around top up here. Obviously you had your top. Yeah, back up a little bit. Just play it forward here. So let's see. So here, if you did have, I'm going to go and look through, but if you did have a bullish signal here or like a long signal, you would have definitely been stopped out here on this bearish TK cross. So this is where we're going to start looking to see if there's any of the, like, when would we have got in on that trade to the downside. So obviously you don't have it yet. So let's stop it for a second. Right away, obviously, like, there's a very significant move down here, but you can tell that your cloud is still bullish, so you would not have that full confirmation trade yet. Better slow it down just a little bit. Cloud is still bullish. There, so you actually got your bullish Kumo twist here. Price is obviously below cloud. Now you're pretty far away from where your Kijun is, but you do have that same short trade. Now obviously this is a bit, this is one of those instances again where you have to use your discretion, like if you're going to take this entry or not. Obviously coming off of this major high, we already had this pretty significant move to the downside, so it wouldn't be too surprising to get a bit of a snapback here if that does happen. But you have all 4 confirmation: Chiku span, below price and cloud. bearish TK cross, price obviously below cloud, and your bearish Kumo twist. So this be your entry. And let's play it. So if you look like right here, so this is exactly what you want to see. So price, this is relatively flat. And you could have seen if you can see that your Tenkan here is very bearish. Like it's forecasted to move to the downside pretty significantly. Your Kijun not so much. But what do you get on this break here? Well, you get your Tenkan and your Kijun here. Look at the angulation. Look at your cloud. This is really optimal, like what you want to see in terms of this trade that you're in. You do have this bit of a C clamp forming here. Like this is a very far distance from your Tenkan and your Kijun. So here, Kijun's pretty flat. So just, you have to keep that in mind. Could have a potential move here, but you did take this low out as well. So the short trade is shaping up. So look at your Kijun, by the way. Look at the forecasting dots. Yes, it's flat at the moment, but it's looking like it's going to move to the downside pretty drastically, which will help move it into equilibrium as well, right? So if either price is going to come up to Kijun or Kijun is going to come to price, one or the other. There you go. So you just had that tap. You see that on the previous candle? It was a perfect tap to put things back into equilibrium. Kijun is a lot closer to Tenkan, which is good. And overall, it's still bearish. And look at this move. So you literally had your equilibrium test, right? Which again is another opportunity. So it's the same thing in reverse. So when you're taking a trade to the downside, your Kijun retests are typically those areas of opportunity. If you missed your initial entry or you're looking to compound your short, that was a very good opportunity to do so. And you can see that price moved, went back into equilibrium just briefly, and then look at this very strong move that took place right after that. And obviously your cloud's very bearish, right? Look at your angulation. So you're still in this trade. Now your Tenkan and Kijun are very close to each other. Okay. So you're very close to each other. Obviously had this big spike up. So just waiting on that cross. Looking like I'm going to slow it down just because it looks like we might get that cross. Okay, so there is your cross. So you just had your bullish TK cross, which basically telling you, hey, time to exit this trade. And Chigu span is also above price, so that's not really in favor. Going along with, for trend continuation technically. So on this candle close here is where you exit. So this is where your short would exit here at 56,351. So right at this close. So not too bad. You see, from your entry down to your exit, it was a 6% move. So that's not too bad. So now I'm going to delete this, and then we'll see if we get any more short setups. Heat it up a little bit. Okay, now I think I might have to actually back this up. Of course, I try to speed it up, and then that's when it takes a nosedive. Okay, so you do not have a bearish TK cross yet, and Chiku span is still technically in this candle. Okay, so now you have a bearish TK cross, and look at this big spike. So if you remember, it's kind of an interesting, again, you got that really big spike to the downside, nice strong buyback. Look at your cloud though. Angulation is very sharp to the downside. Obviously, your Tenkin and Kijun very sharp to the downside. Chiku span is below price and cloud. This is your entry. Now it's kind of one of those things, like if price starts trading back inside cloud, that's probably an exit, right? So like again, remembering that that first short trade that didn't go very well. This is a little bit similar, but again, if you look at the cloud, that's very bearish. You look at the angulation of your Tenkin Kijun, very bearish. And you certainly wouldn't really want to see price trading back inside cloud though. There's that wick. Oh, wow. So there you go. So that's a big follow through move. Let's speed it up a bit. So price comes back into Tenkin. Technically, I mean, this is still an equilibrium test, by the way. I use Kijun as my base always, but coming back to Tenkin, especially after a move like this, is not that surprising. But then, see here, so far you're rejecting off of that. And look at your Tenkin, starting to show that it's going to angle itself. So this right here, like depending on how you set it up, like some people, like you could be stopped out here. So just to be 100% honest, you could be stopped out here. But obviously not with the parameters that we set. But if you're using your Kijun as a stop, which I don't like to do that, I prefer to use market structure instead. And obviously, like I would use Kijun as a base point, but some people like literally put it right under here. And I think that's a big mistake doing that, because you're looking for that Kijun retest anyway, right? So like if you're putting your stop loss right behind her, there's the odds of you getting stopped out are pretty high, and then price could rip the other way. So I don't really like to do that. Here, kind of hinting that you could potentially get a cross soon, unless price drops lower. So really, this is just a big range here that's forming. It's a very big range. And look, so Kijun coming down to meet price. So again, kind of hinting at a potential exit if this keeps going. Cloud though, so look at cloud. Angled to the downside. Okay, now it's kind of hinting that you're going to get that cross. So you got to be careful here in the next couple of candles. Okay, and you did get on this candle. Yes, you did get a bullish TK cross. So you are out of this trade. This confirms, would be here. So you are out of this short trade. Again, another short trade from 53,750 basically down to 46. This one, 13%. So that's a nice trade. Again, two nice short trades that you had there. And just an example of following the trend, right? Taking what the trend gives you. And obviously, like at this point, you can zoom out and see you have a pretty bearish trend overall. So looking for the short trades isn't a bad idea, right? So hold on, I'm going to delete these lines because this is for a March trade that we just exited. Maybe I'll do one more example. I think by now you probably get the point. wait, I messed up. Go back to this cross here because you might actually have had a re-entry. So there's your bullish cross and there's your bearish cross right there. So do you have all of the criteria to get back into a short trade? You have your bearish TK cross, cloud still bearish, choose man, below price, price below cloud, all that. So yes, you are short again. Here at 47. Put a short trade there. Keep going. There's your Kijun retest. Speed it up a little bit. So here it's looking like you might get a bearish TK cross. Speed it down. I'm sorry, a bullish cross. Have that? You do. So this would be an exit. And you would take that. So this would be a losing trade. Basically a couple percent there. So this is actually a really good example too of something that's starting to happen here. Is that if you look, which if you refer back to video 1, Ichimoku is not very good in a range. This is very solid ranging price action here. So if you're trading the range, you probably have, again, this is an excellent trade or range to trade. I know because I traded it. But in this instance, you can see that there was indeed, so we took a loss here on this short. You would have been stopped out here going by the parameters that we set. And obviously price is trading inside a cloud too, something that you really don't want to see. If you're taking a short trade to the downside, you definitely don't want to see price inside a cloud and moving against you. So you would have taken that loss there. See if you get another entry. Speed it up. And again, it's a good thing you exited that. So it's a really good thing that you exit that, right? Let me back up. So here you actually do have a long setup here. Now, a couple of reasons why I wouldn't be that big of a fan of this trade. First of all, it's at the top of your range against this trend, right? So you're trading counter trend at this point. It's at the high of the range. So this is one of those instances where technically you're long in resistance. But a setup is a setup. So that is a long setup. But you are fighting the trend, really. Still, we're okay there. Cloud is very thin. Price is coming back inside a cloud. So this, again, like this is bad for that long trade. It's very bad. So you still don't have a bearish TK cross. Obviously, this ended up being a swing failure pattern of this high over here too. High of the range. Price is moving against you. You're clear through the cloud. Like this is bad, bad, bad written all over it. But gotta keep it the same. Which this is going to be one of those instances again. Where right here, you don't quite have it. Right there. So this That's your exit. So again, if you really wanted to trade this way, you would have taken a pretty decent loss there. But again, look at this overall, even here, all that happened of what this trade did, and this is why I think context is really important too. But again, this is a kind of bit outside the scope of this video, but if you just look at this price action here, it's very simple. All you're trading is the range. So if you look at this right here, this is this one beautiful range, which unfortunately for Ichimoku is really bad. So when you have clear ranges like this, you remember from video 1, range like this is where you will get eaten alive when you're trading an obvious range here. So this is really, it's actually a great example. But this is why Ichimoku is not the best when it comes to ranges. And again, if you're trading this range using, I mean, there's a range trading series that I've done. This is what this price action is built for, right? Ichimoku, not so much. You can see we're getting faked out on both sides. So now right there, okay, so let me delete these lines. So what do we have? Well, we have another short entry. Okay, so you have your bearish TK cross. I'm sorry, your bearish TK cross, bearish Kumo twist, price below cloud, two-span below price and cloud. So this is a short entry. But again, keep in mind the range. So let's move it forward. Speed it up. Again, we had a bit of a C-clamp that was forming throughout here, but this moved down. Obviously, like finally, you're getting a really nice break of the range. Now this is where Ichimoku can come in, and again, like just trading the parameters that you're given, right? It puts you in a trade that broke down below this range. So like a lot of times when you see this, you do get that follow through. And you took this major low here. So this is a big deal. This is, again, continuation of trend. You had a range, broke down below the bottom of that range, and now you're getting that follow through to the downside. So here, do you have that? No. You do not have, now I'm going to slow it down, but you do not have that cross yet. So there, you got it. On, oh wait, I'm sorry, maybe we did. Not here, not here, but on this candle you did. So this was your actual bullish cross here. So here is your exit. Short trade. $7.5%. So decent profit on that short. Clear this up. And we'll just do like one more. So obviously you have no long setup yet, according to the rules. So forecasting dots telling you that there is a cross potentially coming up, which could give you yet another short trade. Let me see. I'm going to slow it down. Do not have that cross yet. Don't have that cross. So funny enough, this did trigger a TK cross, but price closed inside a cloud. So you do not have an entry. Okay, there. So this, you actually do have a short entry here, which is unfortunate that you didn't get. It's really unfortunate. Let me just double check. So yeah, I mean, this closed. So you did get a bearish TK cross, but price closed inside a cloud. So you would not have taken that trade because you don't have all of your optimal settings there. Same thing here, closed inside a cloud. Just double checking, make sure, closed inside a cloud. So your short trade would be here. Price below cloud, bearish TK cross, bearish Kumo, and Chiku span way below price. Let's kind of fast forward this. So the good thing about this so far is that you got, I mean, yeah, you took a bit of a late. It's unfortunate that you didn't get a better entry. This is kind of chasing because you are kind of at the bottom of this range that's forming, but you got that immediate follow through, which is really good. And obviously this turned in, like this, so far, this turned into be a pretty good trade. Right back to your Kijun, rejection off of there. Now you're inside a cloud and looking like you're going to get a cross. So there, you do get a cross. Here, no. Wait, yes. Am I kidding? Right here is your exit. So another short trade. Didn't quite catch the bottom, but according to the parameters that we set for this video, this is the result of this short trade. Another almost 9% move. Not too bad. But yeah, you kind of get the point, right? So like we can keep going on and on and on. So to kind of wrap this up, there have been some outstanding, crazy, amazing trades using Ichimoku. There's been a couple trades that didn't work out very well, right? The point of this is that you're gonna find if you use this indicator, you're gonna find a certain set of rules that you like that tends to suit your style. Whether you're gonna trail a stop loss, which technically, I mean, using the Tenkan Kijun cross like we've been using for this instance, it kind of trailing a stop, especially if price is moving away from you or like towards your favor, obviously. But there are going to be other methods that I'm going to go over, of course. But at the end of the day, like there's been quite a few really nice trades as well, right? And the nice thing about this is that this is one of those strategies where you can employ as a swing trader and to help identify a trend and let the trend do the job for you. Now, not every trade, as you see, is going to be a winner. Some of these, like, again, there were two trades that definitely did not work out very well. Now, whether or not you would have traded it like that, I would say probably not. But still, you know, they didn't end up working out very well. But you had a lot of really, really nice wins as well. So hopefully this video was able to kind of help teach you, again, the optimal trade entries. So you notice there's no optimal trade exit, right? We haven't, like, there's no optimal trade exit because the exits are going to be about personal preference, really. It's going to be about using the different, there's going to be other methods, of course, that suit your personal preference, basically, and like how the type of trader that you're going to be, whether you're going to be more aggressive, you're going to be more conservative. Again, you're going to learn different methods in future videos. But for this one particularly, again, letting the trend keep you in the trade for as long as possible. And overall, again, just looking at these certain setups that we had, again, I think you say that did pretty well overall. So with that being said, hopefully you enjoyed this video. We will see you on the next one. Trade safe.